Hi there, this is Christian Dye from Latitude West Financial, and this is your year-end stock and real estate market report to close out 2023. And then we're going to have an outlook for what we predict will happen in 2024. So I have Ryan Runte from Stonehaus Realty joining me. Dara Fahy from Citywide Mortgages cannot join, but has given us all of his predictions and outlooks of what is going on. So I will be able to update you on what's happening with the mortgages. So a quick disclaimer, the information given today is not to promote the buying or not buying of any real estate or stocks. We advise that you do your own research, talk to your trusted advisors. So we want to jump right in. We want to start with what is the current real estate market condition in BC right now? So we take a look at the Real Estate Board of Greater Vancouver, and right now we find that we have had an increase in sales compared to 1 year ago today. But we are still below the 10-year seasonal average by about 33%. Now, our benchmark price has also gone down since we last reported last quarter, but it has been up since the same time last year in 2022. So overall for the year, we are up, but if you compare it to the peak of 2023, then we are down. So the detached home average in Greater Vancouver is 1.982 million. And then an attached home is about 1 million. And then a condo apartment is about 762. So from the last time we did the report last quarter, we are a little bit down. Now, what type of a market are we in right now? Just to remind people that if you take the number of sales and you take the number of active listings and divide them, you get the ratio. So the sales to active listing ratio is a good indicator to see, are we in a buyer's market, a seller's market, or in a balanced market? If we are below 12%, then we are definitely in a buyer's market. If we are above 20%, then we are in a seller's market. And if we're in between, we're sort of in a balanced market. So let's take a look at 2022. The numbers in 2022 tended to be above 20%. So we were in a buyer's market, in a seller's market. And then when we hit 2023, especially at the beginning of the year, we were more balanced in between 10 and 20%. And then, of course, we spiked in April so that across the board, we were above. And then in August, certain products such as townhomes and condos were above. I think especially because of the high interest rates. So once we had those high interest rates, we ended up having the entry-level condos and townhouses become very, very popular. But with those high interest rates, people couldn't afford the, detached homes. So let's see what's happening most recently. So the sales to active listing report right now overall is between that 12 and 20%, which means we are in a balanced market over here. This isn't such a bad thing, especially if you're a buyer. You don't get the craziness of all of the over asking and the overbidding, unless, of course, it's very, very aggressively priced. So what is the real estate market outlook for 2024 in BC? So this over here is more of a prediction based off of stats. Now, we should know that BC is in a bit of a housing crisis. And what we mean by that, Canada is in a bit of a housing crisis. There's just not enough supply in order to meet the amount of demand. Now, who is this demand? The government has dedicated a certain amount of spots to new immigrants. So we already know the amount of people that are going to be coming into Canada right now. And based off of that, the amount of people coming into Canada, Canada needs to increase new housing production by 3.5 times the current rate just to meet the 2030 target. And of course, according to the Globe and Mail, this report, this is impossible. It's even impossible to meet that 3.5% times current rate by 2040. So this is good news for those of us who own homes, own land, because with supply and demand, if you have a lot of demand and not enough supply, then prices tend to go up. So what about rent? Rental rates are aggressively on the rise as well. And as you could see, Vancouver leads the way in both one bed and two bed condo rental rates. So year over year, we have gone up fair market value, over 20%, for a one bed, 19%, and for two bed, 24% in Vancouver. And then Toronto, is not far behind. So if you're renting right now, you're probably feeling this for sure, that there is an enormous amount of rent increase going on. So what we want to do is we want to make sure that we have all the correct information when it comes to housing as to what the projected outlook is. So demand is going to be high because of the amount of people immigrating to the country. I believe that because rent will be high, for the landlord, will always have a low vacancy rate over here. But being correctly priced is going to be, the next issue over here. Are you correctly priced in what you are renting it at? So I want to shift gears a little bit to Ryan. I want us to see, everything that I show is based off of data and statistics, but Ryan and his team are the ones who currently are selling homes, new construction all over the lower mainland. And he knows, is it an actual balanced market? Are people actually buying? Are people listing? And what does he foresee in 2024? So Ryan, tell us, what are you seeing going on right now between buyers and sellers?
Morning, happy holidays. Yeah, basically what you said, it is a balanced market. And we kind of suspect that next year there's going to be some rate cuts. And once those rate cuts happen, probably the market will shift from balanced market to possibly even a seller's market again, especially if there's, 2 to 3 rate drops. So a lot of this year, the reason why it was slower or balanced was obviously because of the rates. And I know we have a lot of buyers on the sidelines that were pushed out of certain products. So if the rates do drop next year, those people will jump back into the market. So I think 2024, is going to be pretty busy based on the rates.
Yeah, give us a comment over here. We don't know when in 2024 the stimulus is going to come, but if someone was thinking of buying entry level, would you say now is a good time, or should we wait for those rates to come in, or maybe to get something before it gets too hot and then maybe go variable, or so that they can lock in at a later rate, or maybe go a very short term, like a year? What are your thoughts, Ryan?
Yeah, like what we've been seeing, and I think what the brokers have been recommending is to do a short-term rates so that they can, roll it back into something lower. I think a lot of the brokers have been recommending like a short-term fixed rate because those are lower, and then by the time the rates kind of go down more, then they can go into the new rate. But I think overall it is a good time. Like we've been saying to our buyers, you don't want to wait like what happened kind of, around or just after COVID when the market spiked really quickly. If the rates drop pretty quickly, that will happen again. So then you're going to start seeing the multiple offers, and you're going to potentially be outbid on a lot of this product. So I think it's a better time right now because in most cases we're not seeing multiple offers. You're getting money off of the list price. Anywhere from 5 to 7% depending on the product. Especially detached houses, we're seeing some pretty big drops in some markets. So I think now is a good time, and it's all relevant because if you're getting more off now and potentially dealing with a multiple offer when the rates go down, it's kind of relative. But I think it's easier now to get a deal.
Got it. Got it. Yeah, I guess you know, so definitely your recommendation is, if you are in the market to buy, and you are a little bit worried about the rates, and just do a short-term rate, but still, if there's something that you see that you like, you should buy, because you're projecting that in 2024, if rates do come down, there will be a sudden spike in interest, and then we're going to probably go above that 20% again. So then we'll jump back into it being a seller's market.
I think so. Yeah, I think so. And there's a lot of people are renewing their mortgages, 20, myself included, 2025. So, and a lot of people will be in a pretty bad position when they do renew their mortgages. So I do think that the rate cut's going to happen. Obviously bond market and stuff plays a role, but I think they are going to cut it as well to kind of get in front of some of that.
Okay. Okay, great. Um, Tell us what your thoughts are about people who are thinking of upgrading. So they own a condo or a home. Now, they're not going to get the greatest price on their place, but the guy, that next house above where you have that nice big jump, that house might also have come with a deeper discount right now. What are your thoughts about the upgrade? Do we hold, or those people, should they
Yeah.
upgrade?
Yeah, it really depends. So that for the detached houses, if you can get into one right now, it's actually a good time because the government has also announced their changes for zoning. So across the board, you're looking at doing six units on a lot if they're over 5,000 square feet. And now they have that transit orientated development. So if you're within 5 to 800 meters of a SkyTrain station, you'll be able to do 8 to 12 stories or 400 meters of a bus station as well, more density. So all this new density is coming to landowners and detached houses. So yeah, a lot of cases where people own a condo or a townhome, right now you can get a discount because of the rates, but there's some good future value. So even if you're getting an older house, I think there's going to be some larger gains with these like broader zoning changes.
Ryan, let's go a little bit deeper over there. So
Yeah.
now this is to my best understanding. So you're saying if you've got a piece of land over 5,000 square feet, you could now put, sorry, it's possible to put 4 units on it or 5 units.
Well, they're saying 6 units. So it's basically the government is sort of overhauling the municipalities. So the cities have their own current zoning, but basically they're saying by June that is going to have to be changed. So for example, for Vancouver, if you're within 400 meters of, and they call it a bus station, but essentially it's like a bus stop that operates two different routes over a 12-hour period, then they're going to allow at least 6 units. But if you're closer to a SkyTrain within 500 to 800 meters, so that's maybe 4 or 5 blocks, you could do up to 12 stories. So some of these homes, for example, like Renfrew, that are closer to SkyTrain, there's going to be some pretty big changes, and then obviously that land's going to increase more. But essentially across the board, the BC government is saying, well, we're not using the land to the best of its ability. You kind of touched on we don't have enough homes for people, so they need to change the zoning. So we've been kind of saying to investors too, like if you're looking to upgrade to a house, you have this potential as well with the zoning changes to cash in on that.
That's a really good point over there. I know with anyone who's holding on to land right now, I'd be very, very careful before selling it in
Yeah,
order to make a lateral move or to downsize, because now that all these changes are coming quite quickly, you might not realize that you might be sitting on a gold mine, even if you don't develop the land yourself.
right.
Like I would almost kind of wait it out, talk to someone, talk to your advisor to say, let's talk to your advisor if they understand what's going on with the land. And yeah, maybe if you could just put a rental suite in for now, and then research a little bit more, because I know that construction costs are incredibly expensive. It's hard to get labor. So even if you did want to, build on the land, it might be incredibly expensive right now because it's also a supply and demand. There's not enough supply of labor, plus housing costs are quite high as well. But that environment could shift as well.
Yeah,
Like housing costs could go down, cost of lumber could go down. There could be more supply of skilled labor coming in here. I know with my parents' home, for example, I'm delaying them selling their plot of land because it's a corner lot in
yeah,
Surrey. And like one day you might be able to put 3 units on there or 4 units on there.
yeah.
Um, but to my understanding, Ryan, you don't automatically aren't able to put 4 units or 6 units onto a property. It still has to be approved by the city. Is that correct?
Yeah, that's right. But basically, the government is overriding it, and they're saying by June, these municipalities have to change their zoning. So Vancouver's already approved multiplexes right now. So already in Vancouver, you can do up to 6 units if you're a 5,000 square foot lot and you have a rear lane. Otherwise, you could do a duplex if you're 5,000 square feet or more with 4 units with walk-off suites. So the other municipalities like Surrey, North Vancouver, for example, they have to change their stuff by June. So technically, as far as the government reads it, you can do it if you qualify for that square footage and you're close to, bus station or SkyTrain. But the cities, yeah, they still have to change it. But they're being told they have to change their zoning by June. So it'll be interesting to see. So whatever the zoning says right now, it's going to be changed to either transit orientated development or, multiple zoning. But Vancouver's already changed from RS1, which was single family zoning, to now R1-1, which is multi-zoning. So most houses in Vancouver, you're already able to do at least 4 units up to 6. So
And what about what's the difference between the 4 and the 6? Just the square footage of the land?
yeah, essentially, like my house, for example, I have almost 8,000 square foot lot, but the city wants me to have a rear lane for access for, like fire and garbage and stuff. So that might change with the government zoning. But yeah, it depends how your lot is shaped and that stuff. So essentially right now with the city zoning, if you have a larger lot, you could do 6 units, like 5,000 and above. But if you're like a standard lot, you're looking at, sort of the 3 to 4 units. But it all kind of plays into, yeah, construction costs as well, what makes sense on the lot. But as it stands right now, pretty much everything in Vancouver has already increased to larger zoning.
Got it. And how are the rules changed for outside of like city of Vancouver, like Burnaby, North Vancouver? What changes are
Yeah,
there?
so that's what's kind of with the overall government zoning that they're introducing. So they're basically saying that they want to allow up to 6 units, or if it's transit orientated development, up between 8 to 12. So as of June, you basically, and we can look at that for the clients. You have to look at like how close are you to a bus stop, how big is your lot, how is your lot shaped, and then we can kind of give you an estimate of what it should be. And then as of June, basically the province will say to, the city of North Vancouver, for example, okay, you now have to change your zoning for this area to either transit orientated development or just, multi-family development. So we
Got
can
it.
look at individual cases, and we've been getting a lot of calls, and some people right now, for example, in Renfrew, they do fall up to 8 to 12 stories. So that's a pretty big jump for the land. Others, like my lot, for example, right now I'm at 4, but that might change. So we can look at those individual cases.
So your lot, you could build 4 stories onto it or four
Not for
units?
story, 4 units. So right now, my best use of the land, according to the city, is a duplex with lock-off suites. So I could do 70% of my lot, which is about 5,500 square feet. So it's basically a duplex with 2 rental suites below.
Got
So
it.
that's how you do the 4 units on my lot. Although the government is saying you don't really need a lane. So the government's actually saying I can do 6 units. So that's what's interesting to see. Will the government override the municipalities? Which it seems like they want to, because their wording is pretty strong, saying no, we need at least this on this size lot, for example. So it'll be interesting because like North Vancouver, for example, where you are, like they're not super um zoning friendly, right? It takes a long time for them to change zoning. And also places like Coquitlam and stuff. So interesting to see what happens. But the government is pretty aggressive on what they're trying to roll out.
Got it. Got it. And like right now in 2024, what areas do you kind of find are still good almost for investment, or where you see that there's a lot of growth that could potentially happen? Because there's people who are also maybe want to move to a place or want to invest in a place in the Lower Mainland where it has a lot of good potential. And you've given us a lot of great insight, and kind of your predictions in the past have tended to work out quite well. But what is kind of your areas, your top areas where you think there's going to be some really great value for the investor?
Yeah, we're still saying Langley. So Langley's actually introduced their SkyTrain station stops now, so people can Google that. So they've actually showed what the stops are going to be. So we've been trying to put people out there kind of based on that. And then I think that will work out pretty nicely. So same with Port Moody when Evergreen Line went out, the prices jumped quite considerably. Same with, Canvey Corridor. So we think Langley is still going to do quite well. There was a drop with the overall market in Langley because there's so much inventory. But once the SkyTrains are done, I think it's going to go up significantly again. And they've now announced the stations of what's going to be out there.
Got it. And when are these stations going to be built?
I think they're still staying within, the 5 to 7 year mark was the last I heard. So you know how, obviously they're slow on stuff, but having it kind of announced of where the stations are going to be, which is online, and I briefly looked at the map, that's a big thing. And most of the stuff where the new projects like are coming up, like Willoughby Heights, for example, even if you're not right on the SkyTrain path, there's commuter buses where it's a short ride to the station, for example. So all that will play into the value.
And do you think like a condo in those areas, or are you thinking like land, like a house, and then trying to develop it?
Yeah, I think either or, like same thing with this sort of province-wide zoning stuff. If you own a house close to that, then you should fall under the, transit-oriented development. Although the lots out there are smaller, so it's not probably going to be, 8 to 12 stories if you own a house, but same thing, you're going to see more zoning out there. And if you own a house and, you do something with a neighbor, then you could potentially do more, more square footage. So house would still be the best in general now, I think, and that's what we've been saying the last couple of years. If you own land with all these changes coming, that's going to be your best value. But even condo or townhouse, out there close to the SkyTrain path, I think will do well.
Got it. Got it. Yeah. And future outlook for housing prices. Do you see them leveling in 2024 or going upwards?
I think it's going to go upwards, heavily based on the interest rates. But I think if the interest rates start to fall, we're going to have a pretty busy year. Some people are saying as busy as when we kind of were getting out of COVID, which is hard to say. But definitely, there's a lot of people, like I was mentioning, that are on the sidelines waiting. And I know we have clients that were pushed out of certain products, like they wanted to get a townhouse, and now they're pushed down to a condo. So if you do have those 3 to 4 rate drops, that's gonna bring the market up, I think, pretty significantly.
Yeah, I agree. This has been like we've never seen since you and I have been working together actually for,
Yes.
15, almost 20 years. I've never seen the rates go up this quickly, and still housing prices have gone up.
Yeah.
So if this is like as bad as it's going to get, and housing price in Vancouver is still going up, it just goes to show you we just do not have enough supply. There's just
Exactly.
too low of supply for the amount of demand, even with high interest rates.
Yeah, exactly. And that's why the government is being so aggressive with these zoning changes, to see like potentially 8 to 12 stories on, like a 4,000 square foot lot in a, current residential neighborhood is pretty large. So they're obviously aware that we don't have enough housing and we don't have the right type of housing. That's been the biggest issue, right? Because now when we're selling homes, it's mostly people selling their homes going to a small, like a condo or a townhome. You don't see too many younger family buying a single detached house anymore because of affordability. So obviously that's an issue. So, Vancouver's changing to a bigger city like a London or, a Singapore or something. And really in the next 5 to 10 years, we're going to see way more multifamily development than we are single family homes. But if you own land, regardless of these changes, you're going to do well.
No, I agree. I agree. What I want to do is I want to just shift gears a little bit and talk about Dara's prediction as to what's going to go on with mortgages over here, which will of course affect the housing. So right now we kind of have two case scenarios over here. So there is going to be a crisis of a mortgage renewal for sure. So the crisis of 2024, according to statistics and Bank of Canada, they said that 80% of Canadian households will have their mortgage payments increase by 2025. So if the rates do not decrease, then this is kind of their trajectory. So if we have these kind of high rates over here, what they're going to show is that the variable rate, is going to kind of stay really, really high. And what this graph is showing is the median payments. And we noticed that how much it has spiked up, and people in 2023 have definitely felt it. So the red line shows the people who are on variable. And the people who are on variable, of course, have gone straight up average average premium on their mortgage. So the median increase will be going up by about 17%, but at the high end, it could go up as high as 44%. Now, if you're a fixed, then of course you're not going to see that effect as dramatic. But if the rates do go down, then this is kind of that best case scenario. And then what we'll find is that the people who are on variable will have hit the peak in 2023, but then it will start to go down in 2024. So this is kind of government's best case scenario if they start to lighten up the rates, the interest rates for mortgages. So what's happening right now, Bank of Canada prime rate is still at 7.2. Now, the last time we did this report last quarter, a 5-year fix was at 6.25 and the variable was at 6.85. Now, the good news is that has come down. So as of most recently this month, the 5-year fix is now around 5.29 and the variable has come down a little bit at a 6.7. So what is the future outlook for 2024? So right now, there is predictions of as many as 3 rate cuts. So last time they predicted rate increases, they were correct. Now they're predicting rate cuts. All we could do is cross our fingers, hoping that that occurs. Now, if we do get these 3 rate cuts, the report that Dara has given to me says if there are 3 rate cuts, then he's saying we could have the prime rate go down to 5.95. That would be about 2 rate cuts at a 0.5 and 1 rate cut at a 0.25. So it's just kind of a bit of an average. But if that was to occur, I'm sure, Ryan, you would agree, we're going to see a spike in real estate demand. Like there's going to be those guys on the sidelines who are like, hey, I've been waiting a year and a half to buy a place. Now I could afford another 100 grand or 200 grand on a property. And, you know, I can now get that townhouse, or now I'm in striking distance of that, you know, house with the mortgage helper. And then all of a sudden, you know, we've seen it so many times since we've been working together, Ryan. It's sometimes it just takes something really small, and then all of a sudden we're in a crazy real estate market again. Even though that same home has been on sale for 6 months, but now there's multiple offers being on it, or somebody couldn't sell it, you know, a year ago. He
Yeah, exactly.
relists it, and all of a sudden now there's all these multiple offers. This town goes into a buying frenzy. So I do feel that if someone is sitting on the sidelines, don't wait for the herd to
Yeah.
suddenly start flocking towards that property that you've been eyeing on. If you can get a decent price on it and you're worried about the rates, maybe just do a short term, some form of a short term fix, maybe even a variable. And then just go with the best data that you've got in front of you. But what are your thoughts there, Ryan, on the mortgage rates and the spiking demand?
Yeah, I think that's exactly right. If we see those cuts, it's going to change pretty quickly, and I think we're going to start seeing that frenzy and those multiple offers. So, yeah, I mean, if you're looking right now and you can afford what you're looking for, it makes sense to do it before this happens. And all signs are pointing to rate cuts. You know, obviously, it's hard to predict, but just seeing on the chart as well, with so many people renewing in 2025 and having such a large increase in their payments, I think it's going to be adjusted.
Sure, sure. So what I've always said is, you know, to get pre-qualified, because then you're always guaranteed whatever the lowest rate is, whether it be the new rate or whether it be the old rate. So yeah. You know, what I wanted to do is I wanted to touch base, sort of shifting gears again on the importance of getting good advice. And I know for the clients who are listening right now, we're a full financial advising practice that, you know, does the insurance, the investments, and the planning. But what makes us really unique is how we're able to help with the real estate planning as well. And that's to help to navigate whether it's a good time to buy or whether to sell, to do analysis on properties that maybe you already own that you're thinking of liquidating, or maybe you should be holding them. Um, and then the other thing that we do is, you know, Ryan is our trusted advisor here in BC. and has helped many of our clients to buy, their own personal properties as well as cash flowing properties as rental. But our practice has many relationships outside of BC as well, into the US and into even into Mexico for rental properties. And some of the things that we're coming across are really good. There are investments. We're not, these aren't places that you're going to move to, but from an investment perspective, that they're really, really strong as well. You know, and so some of the great properties we've come across outside of BC are incredibly inexpensive compared to our BC rates over here. But people really should be thinking about expanding their portfolio and investing more in real estate. And we have a book coming out that I've written, and it'll come out in 2024, where it's highlighting the importance of buying more real estate, integrating more real estate into your financial future, because it is the number one, it is the number one asset that has caused an ordinary person to create extraordinary wealth. And then if you're not sure what the numbers look like, that's what we're here for. That's what our practice is here for, is to figure out, is this a good idea or not? And a lot of people don't think there's cash flowing real estate out there. It is possible to still get cash flowing real estate. You just have to expand your horizon a little bit on some of the places that are out there. And what we do is we pre-vet them. We look at them. Some of them take a little bit more work because, of course, you have to put in some repairs, or you have to build in property managers, but they do exist, and this is part of our financial practice. And when we start to look at some places as multi-units, one of the huge advantage of multi-units is that the financing is different. You might have trouble financing just buying a one bedroom condo, where it could be easier financing a sixplex when it's under commercial real estate, because they look more at the property as opposed to you. So it's one of those things where I invite people to connect with us if they are sitting on some cash, maybe they're incorporated, and maybe they're thinking, yeah, I would like to be buying more real estate, but does it make sense as opposed to what I'm doing currently in the stock market? So there's this one of the interesting facts that I wanted to highlight over here is, now at the end of 2023, who is the richest person in the world? And most of you probably know it is Elon Musk. As of today, he's worth about $245 billion. And but something that people don't realize is that if we look in history at some other of the wealthiest people, we've got Andrew Carnegie. And if Andrew Carnegie, he is the founder of, he made most of his money in steel as well as other businesses. But if he were around today, and if he had the same wealth that he had 100 years ago, he is actually, in today's dollars, would have been the richest person at 310 billion if we adjust for inflation. Now, the reason why I show this is because Andrew Carnegie gave away 90% of his wealth during his lifetime. So he was a very, very, very generous person with his wealth, and he wanted to try to improve many things. And he would give advice to young people, because he didn't come from money as well. He started from scratch, but he gives advice to younger people that are trying to build wealth. And this is a quote from Andrew Carnegie. 90% of all millionaires became so through owning real estate. More money has been made in real estate than in all industrial investments combined. A wise young man or wage earner of today invests his money in real estate. And I cannot echo this enough. This is sort of the central point of the book that I'm writing, is that investing in the stock market absolutely has a place. I invest in the stock market as well, but it should be integrated with this kind of this tangible asset that grows very, very aggressively over time, as multiple advantages that the stock market does not have as well, such as control, such as leverage, such as tax deductibility. So for those of you who are listening and you own one property, you should be owning five. If you own two properties, you should be owning 10. You should be doubling and tripling the amount of real estate you have by, working more closely with your realtor, working more closely with a financial advisor who knows what they're doing, how to build a real estate portfolio. So our philosophy has always been on integrating with what you're doing in the stock market, but integrating more real estate into that practice as well. And in our practice, we'd like to show you how. So I want to now talk about the stock market outlook for 2024 as well. So the S&P is finished at a little under 5,000 at 4836. NVIDIA has been one of the hot players over here leading the charge. If you invested in NVIDIA, which was one of our recommendations 2 years ago, it has had a 238% year-to-date gain. And I think with with AI, it's one of the reasons why NVIDIA and any tech industry that was heavily into AI technology has done very well. But most of our gains actually occurred in the fourth quarter. So those of you who invest in the stock market realize it's these last 6 weeks where we have seen a lot of our gains. So from October until now, we've seen 16% increase in the S&P 500. So what I've done is I've taken a couple of reports from some head analysts, and I've tried to kind of summarize exactly what they've said. So RBC's head of equity strategy says that earnings expectations look strong ending off 2023. Her and her team predict that the S&P target will hit 5,000 inside 2024. So they're predicting, of course, the stock market will continue to go up. But she does believe that most of the gains happened in Q4 of 2023, which is why we went up so quickly. So because most of the gains have already been occurred, she believes that the stock market will be quite flat over the first 2 quarters of 2024. And then she believes that all of the gains will happen in the last half with about a 6.5% gain. So she's predicting a modest increase in the S&P 500, and then with most of those occurring in the second half. Now my favorite person, and you've probably heard me use him before, is Tom Lee from Fundstrat. This guy gets it more right than he gets it wrong over here. So I like Tom Lee. I always like what he has to say. He had a prediction of a 4750 target by end of 2023. So he predicted this at end of 2022. He was pretty much bang on. He believed that mega cap would lead the way. He was also correct in that space as well. So what is his prediction for 2024? He believes that equities alone will return quite high. So his prediction is much higher than RBC's equity analyst. He believes that there could be as high as 12 to 15% returns, but the majority of these gains will be in the second half of 2024. So again, he's being consistent with what RBC is saying. It says it'll look quite flat for the first half of 2024, but then he feels that there will be this large spike. Now, if we combine this with what Dara and Ryan and I have talked about with the interest rate, it will make sense. Because if the interest rates go down in 2024, 3 rate hikes going down, that will stimulate, many economies. Like tech is highly correlated to interest rates because they leverage so much. So if the interest rates go down, industries that have a lot of growth, a lot of R&D will start borrowing. Then, of course, we have the real estate industry in general. And the real estate industry, if interest rates go down, they will be producing more because they have to take a look at how profitable it will be to build, apartment buildings, how profitable it'll be to build infrastructure. So people in the real estate, if the interest rates go down, of course, that will stimulate their environment as well. So I think there is going to be a pretty strong correlation between how the stock market or how the equity market does and the interest rates falling as well. We're predicting 3 rate cuts. And they're predicting most of the gains will happen the second half of 2024. I think all of this makes complete sense over here. One of the reasons why we believe these rate cuts should occur is because the federal government has been fighting has been fighting inflation. But once they said they have it under control, under 3%, which we're pretty much almost there now, then they said that they will start easing up on interest rates, including, lowering and rate cuts. So Tom Lee Fundstrat predicts 5,200 by the end of 2024. So of the S&P 500. So we'll see if Tom Lee is right. We'll see if Lori from RBC is right when we do this report end of next year. But both signs predict stock market continue to go up, but most of the gains happening on the second half. So we're always saying that should you be invested in the stock market? Absolutely. We should continue to do the dollar cost averaging or to stay invested. But at the same time, we know our strategy is always to integrate more real estate as well as the integration of our stocks over here. At Latitude West, we do not like the volatility of the S&P 500. For those of our clients who invest with us, you know that we don't chase returns. If you're looking for a firm that is looking to beat the S&P 500, we are the wrong firm for that in the equity market. We will beat the S&P 500 on the real estate advice that we're giving, on the real estate we're helping you to put in place, but not when it comes to the volatility of the S&P. We don't like volatility at all. What are the things that we do like is preservation of capital. So what that means is that when we're investing funds for clients, and we encourage people to do this investment strategy as well, we want to invest to preserve the capital. We're able to do this by having a significantly more balance in the portfolios that we design so that they don't have so much direct equity exposure. So what happens is that when the equity markets are up, we capture about 82% of those gains. But when they're down, and of course, we notice that they can be down quite significantly. If we take a look at the S&P returns, we're not going to get killed as much as everybody else who's highly in the equity market. So we'll only capture about 50% of the downside, but 83% of the upside. And what we realize is that that's how we're going to preserve capital for that equity portion that we are doing. But what we do when we want to capture some exciting gains in our diversified portfolio, we look at our private investments. So these are not public investments. So public investments, anyone can invest in. Private investments, you have to go through a private dealership such as ours. And these are things that essentially the public does not have access to. So we like a lot of private investments that are not correlated into the equity market. This is one of our private investments over here of passive real estate investing. So this, of course, is working with one of our private teams. And if you'll notice, the returns in the last 10 years have been fantastic. We have never had a negative year. They have always been quite positive. If you're interested in looking to diversify out of your current equity position, you want to probably connect and look at the privates. More and more institutions are investing in the privates. Pension funds are moving more to the privates. And for us, it's one of the best performers that we're doing because it won't have the volatility. So again, we invite you to connect with us if you want to diversify out of some of the equities that you're currently holding now. Our philosophy has always been that we should have a significantly more balance in what we're trying to do. So in our stock portion, we're trying to preserve capital. We are not chasing returns. We are not trying to beat the S&P 500 here. We are just trying to preserve capital and significantly lower volatility. Then the exciting piece over here is what we're doing on the real estate side, either on the passive or on the active real estate. With the active real estate, we're there to help you to buy more real estate, even though we're not realtors or mortgage brokers, but we're there to help you to analyze it and to help find it, especially if we want to look outside of BC. So right now we want to wrap this session up by inviting any questions that anybody has. If anyone has any questions for Ryan or myself, you could put it in the chat and I will help to moderate it. Ryan, I have a question for you to kick us off. One of my questions is this: if someone had a piece of property and they had children that were going to kind of reach, like maybe they have children entering into their 20s, like I think a big problem right now is going to be how are our children ever going to afford real estate? And this is one of the questions I tackle in my book over here. And I know you've got kids. I have kids. And if we want our children to kind of stay close to us and we want to start thinking about this now, you know, how might we use real estate in order to figure out how to transition? Like what do you have any sort of opinion or strategy of what you're going to do for your own children when they're going to have to start to buy maybe in 15 or 10 years from now?
Yeah, I mean, a lot of what we're seeing and probably what I'm thinking about is, probably when we don't need the house space as much, when the kids are a little bit older, we would most likely sell our land, and hopefully by that time, with all these zoning changes, it's at its sort of best use or and highest amount. We would sell the property. We would go to something smaller, a condo or townhouse, and then help the kids buy a condo, most likely a condo. And that's kind of what we're seeing. A lot of the people that own homes that don't have a mortgage and were able to buy it, in the 80s, for example, they're selling a property and then they're helping their kids out that way by just kind of downsizing.
Yeah, like are you seeing that with clients now?
We've had a
Downsizing?
couple.
Because yeah.
Yeah, we've had a couple this year that have done that. We've had one situation where they're actually just sold their house in Vancouver and they're splitting it amongst four kids, but they had no mortgage. So each kid, they're able to put five to $600,000 towards a property for them, which is not a lot for the Lower Mainland, but it's a pretty good help. So in that case, the kids are working, so they'll still qualify for some of the amount on their own.
Yeah, yeah. Like I know like one idea for me is been and you talk you touched base on it, is that trying to hold my land, but I know it's quite expensive to build on your land and to create a fiveplex or something of that sort or a fourplex. But like my eldest daughter is now 18. If she was to marry, let's say at 25, which is about 7 years from now, if I could hold on to my land, if my land right now, I have a 10,000 square foot lot, and I know right now I'm approved for 5,500 square feet, so 0.55. And
Right.
I've only got about a 3,000 square foot house, so I could add another 2,500 square feet. One of the things I was thinking is to rejig my lot so that I build another 2,500 square feet on it, but I don't pay for it. Instead, I get my daughter and her new partner, if they're trying to get back here on the North Shore, have them pay for the build, but then they could live on the land because it'll
Yeah,
be cheaper. It'll be
yeah.
cheaper than them buying a place.
For sure. Yeah, that's a good idea as well. And I know that's something we've kind of talked about here as well. So I think when the lands have their best use, and that's going to be over these next couple of years, that's a potential option as well. And then, of course, when you sell down the road, you have more built on your lot as well. So that's another good option if I guess if the kids are willing to do that and they're able to afford it as well.
So, that is our stock and real estate report for 2023 and our outlook for 2024. Thank you, everybody, for listening. And if you guys are ready to connect, you could reach myself at Latitude West Financial at cdy@latitude-west.ca. Happy to discuss whatever your current situation is, see if I can help out, especially if you're looking to change things up a little bit with your financial portfolio mix, as well as maybe integrating more real estate into it. If you needed help on the mortgage side, there's Derafaki, or on the real estate side, locally here in BC, there's Ryan Runte. So once again, we hope to hear from you guys soon, and we wish you the best in the new year.